Alrighty. So it is June 23rd, 8:30 in the morning. And the market has already dropped off over roughly 1200 points. But, I don't have to really lie about it. I'll just go to it and drag it out from 6 p.m. and just about that range on the stick. Market has dropped over 955 points in a tick since we opened up in Asia. If we're looking at price from a weekly perspective, as for where we opened in the beginning of the week, making the high of the week to data high for Tuesday, would be this high right up here. If you look at the previous week high as well, it seems like price has relatively opened, made its high up here relatively close to the previous data high slash high of the week from Tuesday, which that price level came in at 3975.50. So I'm gonna jump right into it because I don't want to waste any of you guys' time. But this video is pretty much in continuum with the June 15th plus June 16th partial assessment, because I believe I partially assessed the market in Asia, early New York stages when I was looking over that PA with you guys, showing you guys the trade model. So if you watch that video and then you come back to this one, you could pretty much see how price played out on the 16th here on the left hand side. If you look over here, this is pretty much where we left off of on the last video that was posted and uploaded on here. So this is just continuation of that video going on later into the weeks. So with it being about 8:32 in the morning right now, on Tuesday on the 23rd, you can start to see exactly how the model pretty much withheld and played through all of the individual days, sweeping highs, old lows, things of that sort. Coming back to the order blocks, whatever it is that you're seeing with price when it comes to your markups. However it is that you do, use ICT's tools. I'm not going to spend too much time as I did on the last video, just showing you little things that you can look at with, SMT divergence and understanding correlated assets. Those are just things that I do in the background versus what I'm showing you guys, right now. So, more of the story, what you guys are looking at here is just individual trading ranges from the daily, and those highs and lows are marked up, and then I'm tying institutional order flow concepts into that that idea behind, I guess, support and resistance, or where you anticipate, reversals and things of that sort to take place within the market is above these PD array old highs and lows. So now that I have the ranges delineated like this, you can start to see how the trade models pretty much build themselves up throughout the week. So going off of Tuesday, picking back up where we left off, though I'm not going to remember all the words I said because it's a week later. But we swept Monday's high, stops taken, price fall, and in that sweeping, we create the high of the week on this Tuesday candle. From there, the market decided to continue to sell off. Mind you, I already had some of this marked up and things of that sort for you guys, but we opened here at 9:30, and price, remains bearish below that 9:30 open. We trade what underneath sell stops. We sweep lows out of the market, return into fair value gaps, things of that sort. Fill those on the down end. But all in all, that should let you know, based off of where the market is going, the direction that it's seeking, we're trading downwards, so you target lows. From there, after the market fell, we ended up bottoming out here and making a low at 4 p.m., which was the low of Tuesday at 30,273.75. From there, the market decided to rally up in Asia of Wednesday's trading range, but of course, Tuesday, 6 p.m., that is the opening of Asia. So that is the very first prognostication you're going to see in the market for where we could go when, still kind of opposed from the obvious trend. In a sense, you'll see a lot of the times what I'm trying to say where the market will retrace in a sense after creating a low, especially of the day. And in that sense, when the market retraces, we're going up to grab something. For instance, this old high back here, drawing that over to the right, and you can see how at 4 o'clock in the morning here, how we swept that old high and created the high on the day, and then price just starts to fall and drop off. So very nasty, cluttery, consolidated PA, but the concept, for whatever reason, the algorithm still holds up. Now, does it mean that you participate and take entries in these things? No. Does it do? Does it provide scalping opportunities and things of that sort on the lower time frame? Yes. You just have to know your exits. You have to know when to get in, when to get out, and think about the reason why you're trading before you execute a trade. Because if I was to see something like this on a Wednesday, there possibly were some type of scalping opportunities, but I wouldn't be looking to trade this body of PA. So as well, when you're trading, there's still things that you want to factor in, such as news and things of that sort. So go to Forex Factory. I'm going to pull that here. And I'm going to just minimize it and look at the news that came out for last week. So we want Monday the 15th all the way to Friday, Juneteenth. And we look at the things that happened. So that cluttery, these cluttery bodies of PA, these huge grouping of candles, you have to keep in mind that on Wednesday, right, we ended up having FOMC. So when we have these heavy news drivers such as FOMC, a lot of the times you can get price action like this, but when the news actually releases, that is when you actually see those big, large institutional moves that you could have possibly missed, at 9:30. This is something that you would anticipate to happen at 9:30, but it ended up happening closer to 2 p.m. because we had federal funds rates, FOMC economic projections, statement, and press conference. So all of the moves were really happening after 2 p.m. while everyone is getting caught in consolidated PA in the morning, trading the 9:30 opening, and it's not working out. And then we go later into lunch hour in the afternoon session, and the market just drops thousands of points. So 2 p.m., we had a federal funds rate, FOMC pretty much. So the morning 9:30 session still sold off, but playing around in a range over and over again until we ended up getting that news release between that 2 o'clock and 2:30 time, and the market literally dropped for about 598 points. So looking at the 15-minute and things of that sort, I already had some markups here for FOMC. Looking at price, we came into that 15-minute, that sweep that I identified earlier, other levels of sweeps. Market is just respecting bearishness, but just looking very, very choppy. So the lower the time frame you go, the clearer the PA. This right here was just a golden zone from a fib that I pretty much had drawn from, I think, this higher end of this range in this low here, which is why it was being used like that, just so I could get an idea of how the market could make a potential well, could create a potential area of interest for us into going lower. So right here, drawing that fib, that 79 slash 80.5 retracement level. So that was the golden zone within the fib, and then there was also a internal sweep that happened in there as well. So this is the area I was looking to take the sell in. Just fixing the trend lines and things of that sort because it's coming off of a higher time frame. So everything that's pretty much happening here is just gonna look a little lopsided. It's so many candles, so the range is like overly drawn out and overexpanded. In other words, this is just one of the days where if you don't know what you're doing, you just leave it alone. There's no reason to force yourself to sit in unnecessary stages of drawdown just to try to trade in this chop. So ended up doing it, coming down into that level. This 3000 level, which was pretty much the low end of that gap from Sunday. And we end up trading into the high end of that gap here at FOMC. Got into that gap literally around 203. So took about roughly 30 minutes, probably like 2.5 on the lower time frame. It's probably like 202. But we're on the 3-minute chart, so it took literally one good minute, 3 minutes to be exact, for price to pretty much get down here and trade into that gap high. And from there, the market created a bottom, which is pretty much extending the low of the day. And we create the low of the day here at 203. The market rallies, takes that FOMC high, and then falls again within the golden zone of that fib and sells back off. We come lower, trades through, just magnetizing itself to those areas of money. And I'm just like drawing through it just to give you guys an idea of what it is that you probably were seeing when you were looking at it. And yeah, PA is just lining up, continuing to go lower. We sweep that low, we bottom out here. The market closes, and then we go into the very next session. So just some food for thought. So continuing on, removing that. Thursday, pretty much was a buy day. Market went up and targeted the buy stops, pressing above 35.40. And then we get into Wednesday's high that was resting at 35.80. And we get up into there, extend going higher. The 930 was pretty much diametrically opposed to it. We sell off first, and then the 930 we trade and get back above it, and then remained bullish on the day. Trade into the 30-minute fair value gap here, and another level of another time frames FEG as well. So I believe this was off of the hour. I can't really say for certain because I clean my charts up so they only show on time frames that I want to see it on. So I have to go to current interval and above, and then go and inspect where it is that this is hiding at. But it's not popping up, so I'm not really going to stress too much about it. You're just pretty much taking a look into my markups as I'm going throughout the week. So the fact that I cannot find this markup is literally insane. Current interval and above. Then I go to the hour. Okay, so is this where it's coming from? Tuesday, the 16th. Yeah. Yeah. So this right here is pretty much that FEG. I'm off of the hour chart. So you look at the hour, this gap here, and price coming into that gap here on Thursday. This is us coming into that gap here on Thursday. So it trades into that 1 hour gap, and then price sells off, going off into the very next day. So we sat in this little range here going into 6 p.m. Asia, and then we finally get the sell off coming back into Thursday's range, and we create Friday's low here at 33.88 flat. And from there, price expands, and then we gap down. We take Friday's low. We still have Thursday's low remaining. Then it turtle soups. We go up. We take buy side resting above these short-term highs, such as here, market sweeps, and then here, market sweeps, and we do that on the next day. So the next trading day, though, this is pretty much tying into the next week. So this is how we get here on Monday. So keep in mind that Wednesday, it's not the low of the week or anything. Really, the low of the week would pretty much be down here from Monday because of the gap. But notice how we formed this very heavy, strong low at 29.922 flat, which was on the 17th. Price expands from the low that we created in Wednesday, and we go higher. Now, from this low all the way up to the high from this current Monday, the one that just passed yesterday, this is that range that we've pretty much been playing in, with price taking it from Wednesday's low to Tuesday's high. Now, notice how in that range, what did price do? We cleared Thursday's data high from last week, which was on the 18th. Swept that. We traded higher again, which is those false breaks, those false ideas of price wanting to go higher, just enticing people to get in. So notice what happens. 9:30 price opens, and we trade higher. We made this low on the stick. We trade higher, rally above this down close. This down close candles open, because that was the highest close on the high of last week's PD array from Tuesday. So we get up there, we clear that, almost get above Tuesday's high, but usually what you need to see is just a clearing of the data node, or just the body of the candle. We just need price to trade into it. That should be enough to justify, a clean sweep. It doesn't always have to get above the previous candle's actual wick, high, the wick. So it just needs to get above the close or below it. So after we get up there and fail to take the high, we see rejection. Price comes back below the 930, and now price is bearish. So as we're trading bearishly below the 10 o'clock, which is the new 4 hour that opens in that sweep, we expand lower, and it's pretty much textbook from there. You have your inversion FEG, price comes back down into that, trades into it, tests, multiple tests. Then at 6 p.m., we rally off again after sitting and consolidating here. So the gap from Juneteenth pretty much got traded through, filled on Monday. And now on Tuesday, we've pretty much now expanded and dragged ourselves all the way back through the gap that we created on the 14th. So there's two gaps here that pretty much got their little fills. Primarily the one from Juneteenth, which was very small, but the bigger one that I've been eyeing for a minute now is the one that we created literally a week and 3 days ago. Because Sunday does count as a tradable day. So it took 1, 2, 3, 4, 5, 6, 7, 8, 9. It took us 9 days to get back here. So if you take a datum price range and drag it from 6 p.m. all the way over, you'll see that it roughly took us 8 days, 14 hours, and 30 minutes to get back to this area again. So sometimes you will see gaps get left and untouched for weeks. It is possible, it can happen. And then we come back on a random day and just refill everything that we've created. So we've just been trading in this big range, dry rating, back and forth, and we're now finally starting to see price return back to where it really truly wanted to be, which was in this gap, filling it, because you know what FEGs are. You know, FEGs are pretty much areas within price that haven't got its fair share of a fill. So in order for price to be fairly evaluated, we need to see price return back into these gaps for efficient trading. And we finally done that today on the 23rd, Tuesday. Really started Monday after we got that false breakout. But Tuesday is really what's starting to deliver the rest of that handle or that idea back into this gap. So Monday, Tuesday of this week, we start off very strong. We have the high of the week here from Tuesday, and then the low of the week here. In 2 days, this candle for the week, factoring in Sunday as well, but really the high was made, within Monday's tradable session. So just within 2 days, the market has already rallied up 5,041 ticks. So if you don't understand how you convert ticks into points to really hone into the ranges, you would just simply divide by 4. So you have 5,041, and then you divide that by 4. That means that the market has pretty much roughly ran for about 1,260 points in a tick. And we've done that in just 2 days. Just looking at where the high of this PA is, all the way down to this low, took us roughly about 22 hours. Because when it started, it was at 10 o'clock. So took us about 22 hours and 30 minutes for a price to drag itself all the way down here. We just been selling for the entire day. We have been selling since yesterday, 10 o'clock. We've been selling into Asia as the market starts to open itself back up. And now, from the algorithm's perspective, being active after midnight, we are now starting to draw and drag ourselves to those areas that we left resting below within the previous weeks that we haven't cleared out previously before, because we have liquidity resting below. So now that we're here, one or two things could possibly happen with PA. Is we continue to trade lower, we fill this gap, and the market starts to come back to its senses and maybe possibly get down to here. Now, I'm only giving you the nearest draws of liquidity. It's honestly not a hard concept to understand. You feel me? Where do you feel like the market is more, common to go to at this point of time? The weekly's bearish. That means the monthly's is, as well bearish because the retrace. But take that off real quick. Showing the lines. But because of the retrace, yes, we are bullish for the month of June in a sense, but because of that retrace away from the high of the week, that candle is of course going to show that bearishness. So the weekly is going to look bearish for the week. The monthly is pretty much going to be adding up the first 2 weeks and tying that into the third week. So you can see how the first 2 weeks we were pretty much looking bullish, and now on this very third week we're starting to see that bearish handle pan. So it's changing the decision of how this monthly candle wants to look. So can't really say we're bearish on the month, can't really say we're bullish on the month, because this candle still has a high up close in a sense, or there's still bullish pressure that's trying to get filled. So don't know exactly if we're going to end up bearish on the month, but shit, looking at how the weekly traded off, we might just go lower and completely fill the gap. Could come down into this gap here and really fill that Monday low from the 8th back in June. Still in June, but the 8th of June. So we can maybe see that low get filled down here, which is really the 9th but on the weekly it's showing that other time. So who knows? Definitely would like to see it happen. Will it happen all in this one day? Probably not, but that's cool. So I hope you guys enjoyed the video. Try not to make the videos really too long because I understand how people's attention spans get with these concepts. So I try to make them friendly. Try to make them very friendly and somewhat understandable, so that way you guys can try to relate to it and make something of yourself with it. So this is pretty much everything that I owed you guys from last week Tuesday, tying all the way into this week. Might as well get it up out the way. Tying all of the trading ranges into each other. Usually I would just go through all of the trading ranges one by one, and give you guys a video every day. And if you've been paying attention, then you would just be tying those videos together and just looking at each and single every range and how they panned out, how they gave you opportunities to participate within London, Asia, and of course New York as well. And if you're trading the afternoon session, or if there's any news drivers, things of that sort, you're literally factoring all of that into your trading when you're tying all these ranges and things of that sort together. So that's how I'm pretty much able to build the models in a sense, but that still doesn't really teach you how to trade them. It just gives you levels to eye and look at. So we're approaching the low end of the gap, as I've stated before. At 9:30, we could possibly expect to see a further push down, maybe form some type of retracement coming back up. Could trade into this order block / FEG here and clear some buy side, then draw back off. Or since we've already been spooling down anyways, we might not come back up and just continue to just send downwards into the gap and maybe get underneath this low here, resting at 29,231.25. So if it does happen and we get down here, we'd definitely like to see this level get traded into. If it doesn't, then just expect a retrace going further up. So it could be, if it doesn't do this, it'll do that type of thing. So just try to give you guys two sides of the story. It won't always just work in the way that you want it to work all the time. You have to be able to think for yourself and become very reactionary when you don't see the things that you want to see actually happen. But that's pretty much it. So that's all I have for you guys here. Definitely enjoy the trading session for today. I hope you guys make money, and I'll see you next time on the next video. The next video will pretty much just be me covering the rest of Tuesday once this PA pans out, and then going further on into the rest of the week, all the way up until Friday, which would be the 26th of June. And then there'll be just a couple more days resting of June, and the whole models, these case studies, the way that I am trading, that will pretty much be done for the month of June, at least when it comes to the price action and just understanding how do you get these targets and arrive at these levels, and where you anticipate. There's a lot of things that you can take just from these videos and things of that sort that I post alone. It's a lot of gems. It's a lot of tools and certain material that I'm using, and I'm just showing you guys how tying everything together. So yes, don't want to waste anyone's time. Hope you enjoyed the video, and I will see you guys on the next one.